Hi everybody. Today I'm back and I'll talk about risk to reward ratio. Yeah, I feel that is an important component to trading because it almost determines whether you are profitable at the end of the day. Yeah, there's a lot of things that we can control when we are trading, and there's only one thing we probably cannot control, and that's the market itself. Other than that, our emotions, the strategy that we've chosen to trade, where we are trading, how we are going to trade, how we're going to manage the trade, all can be controlled. And the risk reward is one factor that is definitely within our control. Now, what this chart basically shows is that uh, if you're going for a 1:1 risk to reward, that means you're risking $10 to win $10, you need at least a 50% win rate, and that's just only to break even. Anything above that will be profitable for you. And personally, I feel that to achieve 1:1 is actually a pretty tough thing to do in the long run. I always like to joke with my friends within the trading world is that I'm actually a professional loser. That means I actually lose more than half the time when I trade. Yeah. So my win rate is actually anywhere between 2:1 or 3:1. Yeah, that's why with that you can see that for 2:1 win rate ratio, risk to reward ratio is that I only need to win about 40% of the time to actually be a profitable winner. And 3:1, I need only to win 30% of the time to be a profitable trader. So that's why I say it's much easier to be a professional loser rather than a professional winner. I think a lot of newbies that start trading, they always look for high win rate strategy, or I want a strategy that gives me 70% win rate. Unfortunately, I don't think that's quite a viable thing to do. Yeah, at least not right off the bat of your trading career. That is really, really tough to achieve. For a professional trader, might be achievable. For a day trader who has about 3 to 5 years of trading experience, might be achievable, but definitely not for a newbie. Yeah. It's far easier to go for a strategy which gives you 40 to 50% win rate, but when it wins, it either hit a home run trade, then it gives you 2:1, 3:1, or even up to 5:1, rather than something that you have a strategy that you have to monitor every day, day in, day out, just to have a high win rate. I personally don't think that's really a viable way to go about trading. So let me share something with you. Now, win rate is not the only thing that we have to be worried about. Yeah. When we are deciding our risk to reward ratio, we should not go for a arbitrary win rate. That means I will go for a 3:1 because I only need about 30 to 40% for the strategy to work in order to make money. I don't think that's a very smart thing to do. Yeah, definitely we should go for a trade which gives you at least more than 1:1. Yeah, that means you win $10, it should give you at least $10 minimum, or at least it should give you $15 or $20 or more. Yeah, but not an arbitrary number every time. What I mean by that is that instead of setting an arbitrary number, go for 2:1, you should set a number that says that goes with more than 1:1, and more importantly, achievable at that point of time. Yeah, and what is achievable? Easily, you can use the horizontal level to plot it out fast. So, for example, with this chart, I'm going to plot a horizontal level, and let's say it looks fantastic to me. Price bounce off here and here in the past. I'm just going to wait for, you can see that recently price actually broke this level. I'm just going to wait for a simple retest of the level. Not a spin bar. It actually closes above level. Doesn't really look fantastic to me. You can see that the price break below again, and then hey, this might be a tradable price action to me. Let's say I trade this bar. So you can see that I set the tool for the rewards. Let's say for this time around, I decide to go for a fantastic win rate, 5:1. Let's see what turns out. Oh, price is going further down. Oh, retrace it. Very bearish bar, and then he actually hits. Yeah, so anything that's 5:1, I would think is fantastic. Yeah, but is this really achievable, easily done in the long run? I think this is actually a lucky trade example. Yeah, but let's look at something else. So what I mean 5:1 is that I risk $10 to get $50. I risk $100 to get $500. On paper, it sounds really, really good. Yeah, but you must remember one thing, that the higher the ratio, the percentage for the trade to actually work out is actually lesser. Yeah. So it's actually an inverse relationship. So let's go for another chart. So let's say for this. Now you can see that price is really bullish, and then then immediately turn bearish. So probably I need to plot out a level if I can trade. This may be a bearish trend. So let's say I decide to trade for a horizontal level, go for this level. That's because previously that's where price kind of hesitated. So I need to wait for price to actually break and retest from below. So actually close above. Might need to reconsider level. Now it actually broke again. This actually closes above the level which I want to trade. I'll still keep this level. Let's see what happens next. It's pretty bearish. And price actually go. Now, let's look back for a moment. Let's say I decide to actually revise the level that I want to trade from because price previously actually retraced back. Then give me a second opportunity. On hindsight, this actually looks like a good trade to take. So let me place. Let's say I really decide to enter this. What happens next? If I go into similar to prior trade, I go for a 5:1. Do I hit it? No, I actually didn't hit it. Price goes to 3:1 and actually reverse back already. Yeah, it didn't really hit my 5:1. So this is kind of a wasted opportunity. But then again, could I have prevented the situation? I could have. And like I mentioned before, don't go for arbitrary high reward trades. I don't think that is a good way to enter your trading. Now, if you notice that this is where previously price bounced off at, from the horizontal level, and immediately when you enter a trade, this can be done easily. It would have shown you that aiming for a 3:1 would make much more sense. Yeah, because a 4:1 trade, that means price actually has to break a horizontal level. Yeah, and as all traders tell you, horizontal levels are pretty important. Yeah, so let's not doubt that mantra for a little while. And if you have actually gone for 3:1, this will actually be a winning trade. You could have get that if you reach $100, you can bank that $300 instead of straight away going for a 5:1 risk to reward ratio. So my point today is that yes, I did mention that risk to reward is important to your trading. Go for trades that offer more than 1:1. 2:1 would be good for a start. Then eventually, when you hone your strategy to a better state, you can go for higher. Try to risk adjust to probably 3:1 or 4:1 maybe. That's up to your personal taste. My point today is that over a period of long time after you have journal your trades, so for some trades you go for 2:1, some trades you go to 1.5:1, some trades you go to 3:1. You'll have a good idea when you gather all, and you have an average win rate. From there, you will know how well you are faring. Yeah. So like I wish to mention again, always plot a horizontal level where you like to take your rewards. Don't just leave it to chance and set a arbitrary number. Hope you enjoyed today's lesson. See you another day. Goodbye.